Hello, Angie Hall with Windermere Real Estate and Bell Residence. How are you today? I have our quick weekly update, and we'll start with hot off of my printer from Eric Osnes at Homebridge. Thank you, Eric. So let's just get right in. What's happening in the mortgage world? So mortgage rates are down this week. Why? Partly over concerns about the global economy, especially with the Delta variant of COVID starting to increase in numbers, and due to disagreement within the Federal Reserve as to when they will start tapering their purchases of mortgage-backed securities, which keeps rates artificially low. The debate around timing to taper support for the economy highlighted the focus on inflation and labor metrics, as growth that is too rapid may lead to labor shortages and a stalling in recovery. But tapering too soon could stall the economic expansion just when it is needed most. Here are the national averages for mortgage rates this week. A conventional 30-year fixed rate, 3.03%, down from 3.25% last week. A conventional 15-year fixed rate is 2.47%, down from 2.62% last week. FHA and VA 30-year fixed rates, 2.55%, up from 2.72% last week. A jumbo 30-year fixed rate, 3.15%, down from 3.19% last week. Bubble? What bubble? The internet is full of prognostications that the housing bubble is about to pop. I'll go on the record to say that there is no bubble at this time. It's easy to make comparisons to the housing bubble that really did pop back in 2008, leading to the biggest housing crisis for our time, but the situation is different. Why? Here are a few reasons. The bubble that caused the Great Recession was due largely to speculation and irresponsible lending. At that time, it was easy to get a zero-down loan with stated income. Those programs no longer exist. In 2010, the Dodd-Frank Act imposed strict lending standards that force a lender to prove ability to repay. This act has led to a very healthy mortgage industry with the lowest foreclosures on record. There was also, point two, why no bubble, there was also a ton of home inventory at that time, the 2008. 3.7 million homes on the market, with about 116 million households, giving lots of slack for prices to fall. Today, there is a severe shortage of inventory. 1 million homes, over 128 million households. With such a shortage, it is unlikely that an economic downturn would lead to massive price drops. And our third, the end of forbearance programs is not likely to lead to high foreclosures. At the peak of COVID, there were over 5 million homes in forbearance. Today, there are fewer than 2 million homes in forbearance. Not enough to move the markets. 4, jobs. Last month, over 850,000 jobs were created, and there is still about 8 million jobs opening nationwide. As the masks have come off, the economy is growing. And finally, the fifth reason, not saying there's a bubble, equity. Unlike the Great Recession, we have equity. Last month, U.S. homeowner equity surged to $23 trillion. If a person needs to sell their home, it won't be a short sale, and there will be a line of people waiting to buy it. That said, it is possible for an individual buyer to create their own bubble. If you get engaged in an aggressive bidding war on a home and pay more than the market price, it will take some time before you reach the break-even point where the market value of your home catches up to the price you paid. Just takes time. Hope you all have a great weekend. Thank you, Eric. Appreciate your insight. And just super quick, kind of going back to Eric's point on number 4 about the jobs, and to piggyback on why we're still seeing such a housing shortage. I was watching my coach this week, and she said how, yes, jobs are coming back, and a lot of them are in the hospitality, bars, restaurants. And actually, we still have a shortage in construction workers. So that just still leads to the homes just aren't being built. So our inventory continues to be low. So I just piggyback off of what Eric is saying about the bubble as well. So thank you, Eric. All right, quick breakdown of what happened in the market this last week. Overall in King County, so I just looked back 7 days. So King County, there were 433 closed homes, 5 median days on market, and 930,000 was the median price just for the week. Waterfront, so Bell Residence, we really do specialize in waterfront. So I just kind of look at from Magnolia down to the South Sound. There were 2 closed sales this last week with a median 6 days on market. And actually, both of these closed sales were on Angle Lake. One was kind of a traditional family home, closed at $1.451 million. And the other was more of a development opportunity, closed at $1.1 million, just so for prices. Then again, in Area 130, which is kind of the Burien area that we service, Shorewood, Seahurst, Three Tree Point, Lombardy Park, saw 15 closed sales last week, with 6 median days on market and a median price of $812,000. So I looked to see how much over ask percentage wise these closed sales are going, and under the 2 weeks or less on market, prices escalated. Homes that were on the market longer either went at ask or below. And so just kind of looking at the percentages over, one home went 21% over, another went just 3% over, with the range kind of being between that 10 to 20%. And I'm really seeing lately that it's hard to just say, oh, offer 20%, you'll be covered. It really is property to property and what activity is going on. How was the home priced? So again, when you're out house shopping and ready to put in an offer, each one is different. So while people say, what will it do to get this done? It's impossible to predict. Cents didn't fill in, but I remember them. Little snafu. In King County, there are currently 1,397 active, with 2,777 pending. So that's 198% seller's market. So again, piggybacking back to Eric, where just the inventory is so low, and this housing market is totally different than in 2008. So in Area 130, our Burien area that we service, there are 37 that are active, 46 pending, which is 124% seller's market. I also looked a little deeper, which was interesting to see. So of the 37 that are active, 15 of those have actually been on the market for 2 weeks or less. And I went through and looked a little further. Actually, some really beautiful homes. It might have just been with the holiday week, something just a little off. But if you're looking at that area, there are some nice homes available that now could be a great opportunity for buyers. And then of the pendings, 39 of the 46 were 2 weeks or less. So again, it just really goes to show that pricing and getting it in that kind of sweet spot of that 5-6 days really is where you're going to get top dollar. In our waterfront finally market, we have 18 active, 13 pending, giving us a 72% seller's market. So that's up just a little bit. Last week we saw waterfront being a little bit more neutral. But now we're seeing a couple have gone pending, so that's great. But there are 13 that have been on on the market 2 weeks or more. So again, opportunity is out there. You just kind of have to be creative and look. We also were able to get a buyer under contract this week. Originally thought was going to need to be contingent, which wasn't going to fly on those hot houses. Talk to your lenders. Get creative. See where else you can go, because we were able to still be in a wonderful price point, not contingent. Got the offer accepted. So there are ways to do this. You just got to get a little creative. Make sure you're working with a team that really knows how to do that and still protect you as a buyer. Sellers, great time. Again, price still does matter. So as you're out and about this weekend, please do shop local. 152nd Southwest has all my favorite little spots and shops. I had Treats cookie ice cream sandwich yesterday. It's a must on these hot days. Delicious. And if you would like to reach out, Angie@windermere.com, or please check us out at bellresidence.com. Have a wonderful weekend, and we will see you next time. Thank you.